But our top story tonight, and it's a story that's now echoing across the world because the US markets have also opened 1,000 points down. There's been a bloodbath on Dalal Street. The Sensex has crashed 1625 points, which amounts to about 6% today, the biggest fall in the last 7 years. Let's give you all the big numbers today that has shocked the country. Biggest fall for the markets in 7 years. One day, 7 lakh crore worth of investors' wealth has been wiped out. The sell-off in markets triggered off by a global meltdown. The rupee also has shrunk to a fresh 2-year low. It's weakened from 64 to the dollar to 66.74, a fall of over 4%. The Chinese devaluation and the Chinese economy in trouble is seen as the main factor. Monday's carnage being attributed to that rout in Chinese equities. Shanghai equities closing 8.75% lower, marking their single-day percentage loss since 2004. The government has now gone into damage control. RBI Governor Raghuram Rajan attempting to placate fears that India's economy could also see a downturn. Finance Minister Arun Jaitley insisting that this is only global cues which will have a transient impact on India.
7 years after the financial crisis, advanced economies are still growing fairly slowly, while a number of emerging markets are experiencing difficulties with their old export-led growth model. Now, many of you are watching markets this morning worried about the continued volatility from last week. While I don't want to opine on the future direction of markets, I will say that relative to other countries, India is in a good position. We have approximately $380 billion in reserves to be used as and when the need arises.
A great amount of turbulence which has been caused in the global markets. And obviously that turbulence has had its impact on the Indian markets itself. Now the factors responsible for this are entirely external. There is not a single domestic factor in India. We have to strengthen our own economy. Now we've embarked on a path for the last 1.25 years that even in the midst of a global slowdown, India should emerge as one of the fastest growing economies in the world.
Now China's market turmoil is fueling uncertainty in Asia as well as European markets. India Today's Anand Krishnan joins me at the moment live from Beijing. Appreciate your joining me, Anand. The panic that we are seeing in India, I presume it's multiple, it's even greater at the moment in China. Give us a sense of what's happening in China at the moment.
Well, yeah, Rajdeep, to investors that I've spoken to today, both in Beijing and Shanghai, there's not only a sense of panic, but there's a certain sense of shock. Because there was widespread agreement that the worst was over. Because, as you know, the market has been falling since June, since mid-June. And even before the events of today, we've seen something like 4 trillion yuan of wealth. That's about $650 billion of wealth wiped out. So we're talking about something that's many times the scale of Greece, which has been getting all the headlines. So there's a certain sense of shock. And for the party as well, beyond the fall of the market, I think it's their bigger worry is a blow to their credibility. Because in the past few days, we've seen the party move to try and reassure investors. And just on Saturday, there was a new policy that would allow pension funds to invest in the stock market for the first time. All this, of course, was aimed at boosting confidence. But then when the markets opened today, it seemed that that was completely shattered.
Are things expected to get worse, Anand, before they get better? Do you see the Chinese government acting again to further devalue the yuan in the next few days?
The dilemma for the party is that it's sort of between a rock and a hard place, because the last two interventions in some sense made things worse. We saw the first intervention was when the government moved in and made it illegal for people to short sell, and then ordered state-run firms to buy stock, and that sort of panicked the market even more. And then, just as you mentioned, we had the devaluation about a week ago, and that was by 2%, which is the biggest that we've seen in more than a decade. And the takeaway from that as well was that, well, the government must be panicked. That's why it's taking these unprecedented steps. So the government's in this really tough situation where every move that it makes seems to be spooking the market even more. So what economists say that probably the government's best bet for now is to just ride this out, because even though we've lost so much money over the past 6 to 8 weeks, we should remember that the market right now is just back to where it was in December 2014, before it went on a crazy bull run of 150%, which actually didn't make all that much news. So some people say this isn't really a crisis, but just something that was a long overdue market adjustment.
Okay, Anand Krishnan joining us there live from Beijing, where really the root of the problem reportedly lies. Let's then go straight across to North Block, because Jayant Sinha, the Minister of State for Finance, is joining me at the moment. Appreciate your joining me, Mr. Sinha. The government seems to be blaming the market, the falling markets and the rupees crisis almost entirely on global cues, saying it's not our problem, it is actually China's problem, the world's problem. Are you telling me North Block must not take any responsibility for the kind of panic that has set in today?
No, Rajdeep, what is happening is very clearly a global downdraft in equity markets. It started on Friday when the S&P dropped over 3%, which is a very, very large decline in the US markets, and that was obviously then mirrored in what we saw happening in Shanghai and Japan when markets opened. So under the circumstances when there is this kind of a global sell-off and there is an adjustment in equity prices around the world, and people are redeeming funds from emerging markets across the board, it will naturally have a significant impact in India as well.
The reason
India, whether you look at the equity markets or you look at currency prices, India was in line with all the other emerging markets.
The reason I'm asking you this, Mr. Sinha, is that when you were in the opposition, any faltering of the rupee, the markets, the economy was immediately blamed on Manmohan Singh's government. Dr. Singh's government would also say in every instance that there is a global crisis, particularly between 28 and 11. How do you respond to those now within the Congress who say, well, it's the BJP's turn to explain?
You obviously have to look at it in comparison to other markets, because markets have to be looked at in a relative way. And again, if you look at markets today, if indeed the currency had weakened more than other markets, or the equity markets had dropped further than other markets, then we could have blamed it on government policy making or some India-specific factors. But what we've seen today is that the Indian market has moved very much in line with all the other markets. And in fact, if you look at what experts are saying, or what some investors are also saying, everybody is saying that this is a significant buying opportunity in India, because while there's been indiscriminate selling around the world, this enables you to now take favorable positions in markets or countries where the prospects are much better than they are in other countries. So India, in fact, is looking as a very interesting investment opportunity to many investors right now.
Interesting, you're saying it's an interesting investment opportunity for Indians. The fact, though, is, Mr. Sinha, that while one concedes that there is a Chinese crisis which is spooking global markets, there are problems with our economy. Our banking sector, saddled with NPAs, our exports and imports degrew by 10% in July. Farm sector has degrown in the last 12 months. There are worrying signs, monsoon deficit, certainly no signs, pardon me using the word, of Achhe Din.
Agricultural growth has been positive. Exports indeed have declined, but the banking problems are well in hand. We are working on the NPAs. We are adopting a divide and conquer approach. We've capitalized the banks. We are seeing actually very strong indirect tax collections. We are seeing strong FDI flows. Investment is picking up. Obviously, public spending and public investment is picking up. So as far as the economy is concerned, we are very well positioned. And certainly once this indiscriminate selling stops and people look around to find where the values are, they'll certainly find that in the Indian economy and with Indian share price.
There's also a concern which has been expressed since this morning, or at least someone has SMS'd me saying, please ask the finance minister this, that retail investors are not being given enough information, that there is an information asymmetry, that they are not being informed of escalating risks at any stage by this government.
No, I think we have as a government gone out of our way to communicate transparently to the markets. I meet with investors, I meet with retail investors, I speak on channels like yours all the time. So I think we've been very transparent in our communications. For retail investors, the story really is that today the Indian market is on sale. There are great companies that you can buy at very attractive prices because global factors have impelled a slow sell-off. So under those circumstances, people in India, particularly retail investors that think longer term, can really take advantage of this buying opportunity and position themselves very well for the future.
Are you sure then that we are not heading into a 2008 like global crisis sparked off by China, that investors in this country have nothing to be worried about, and that reports that the Indian economy could be faltering are completely unwarranted?
Well, the Indian economy is quite well insulated, and even in the 2008 financial crisis, India actually managed to get through it relatively well, and we will get through any financial situation relatively well. Our economy is strong, we are seeing good domestic consumption growth, indirect tax collections are up, and as I said, there are lots and lots of great companies on sale right now, and that's really what I think our retail investors should be focused on, is to really find those terrific companies that they wish they could have bought when the prices were higher, but now are available at much lower prices. So those are the ones I'd be really looking for right now.
Let me ask you one more time, also keeping of course your background in investment banking, can we say with confidence, Mr. Sinha, don't worry, be happy to investors who've lost a fortune today?
Well, as far as the markets are concerned, you should eternally be vigilant because anything is possible at any time. But again, as I said, as of now, Indian markets are very well positioned, and our retail investors should be really going through the wreckage and really looking for those diamonds.
Okay, I'm going to leave you there, Jensen. I appreciate your joining us. You're giving us a more positive picture on a day when 7 lakh crores have been lost by investors. You're saying this is an opportunity. Let me now look at that larger question. Is this an opportunity, or are we heading into a potential crisis? Is this a moment of adversity? Just for a moment to contrast what happened when the government was sworn in May 26, 2014 with what's happened today. Remember, the rupee then was 58.42 to the dollar. It's now 66.89 to the dollar. So that's what's happened over these last few months. And if you look at the Sensex too, there's been a huge downturn also in the Sensex.